Business documents. All businesses undertake buying and selling of goods and services to earn profit. In this process, business documents are issued between buyer and seller as a source of information about any of the following transaction: sales transaction, purchase transaction, receipt transaction, payment transaction. Business documents are essential instruments for tracking the internal as well as external financial activity of business, its record keeping and communication, and to ensure that the important information is easily accessible to all the concerned whenever required. Flow of documents. Flow of documents is explained below. Seller sends a quotation and the buyer/purchaser receives it. The buyer sends purchase order and the seller receives it. The seller sends the advice note and the buyer receives it. The seller sends the delivery note with goods and the buyer receives. He checks the goods and if the same are in order, he signs one copy of the delivery note. The seller sends an invoice which the buyer receives. In case of incorrect order or if there is some fault in the goods, the same are retuned by the buyer to the seller. Then there is the following flow of documents. Buyer returns the faulty goods to the seller along with a debit note, and the seller checks the fault. Seller accepts the returns and sends a credit note to the buyer, who enters the returns in his books. Seller sends the monthly statement of account which the buyer receives and checks it with his own record. The buyer sends payment for goods and remittance advice of payment, which the seller receives. The seller sends a receipt to the buyer, and the buyer enters it in his cash book. Examples of business documents. Quotation. It is issued by the seller to the potential buyer. It contains important details such as what is to be supplied, when, where, and at what price. It is signed by the seller. Purchase order. It is issued by a business when it intends to purchase goods or services from the supplier. It contains the name of the supplier, date of the order, details of the goods or service ordered, and delivery date. Advice note. It is sent by the seller to the buyer to inform him that the goods will be dispatched on a specific date. Delivery, dispatch. Note. It is sent by the seller with the goods to the buyer. It contains the purchaser's name and address, details of goods dispatched, quantity supplied, delivery address, date and space for the buyer/recipient's signature. Invoice. It is issued by the seller when he sells goods or services to the buyer on credit. It contains seller's name and address, buyer's name and address, date, description of goods and services required, delivery date, any trade discounts given, amount owing, and terms and conditions of any cash discounts if given. Purchases return debit note. It is issued by the buyer to the supplier when the goods received are faulty or the same are not as per order. Examples of business documents. Continued. Sales returns credit note. After checking the returned goods, the supplier sends sales return credit note to the buyer, amount of which will be deducted from their statement of account. Statement of account. At the end of every month, the seller sends the statement of account to the buyer which shows how much is owed to the supplier. Remittance advice. After making payment, the buyer issues a remittance advice to seller, supplier. Receipt. On receiving the amount, the seller issues a receipt to the buyer. Check. It is a document/negotiable instrument issued to a bank directing it to pay a certain amount of money to a person named on it. Check counterfoil. It is a part of the checkbook kept by the account holder as a record of payment when a check is issued. Paying in slip. It is a document for recording the details of cash/check into a bank account. It is also known as deposit slip. Petty cash voucher. It is a document which records payment from petty cash fund. Thank you.